Nearly a century ago, Gann claimed that time could reveal market turning points before price confirmed them. What if that same principle could help identify potential intraday tops and bottoms in today's market conditions? These are the current top 3 companies by market capitalization: NVIDIA, Apple, and Alphabet. And in this video, we're going to take these markets and test a very specific idea. Can we calculate the time of an intraday reaction using Gann Square of 9 before that reaction actually forms? To test this, we're going to start with a completed price swing, measure the number of intraday bars in that move, and then compare it with the movement of the ascendant. Before we begin, here is a financial disclaimer. This content is for educational purposes only and does not constitute financial advice. Trading involves risk, and you may lose capital. Always conduct your own research before making financial decisions. Trading futures and options involves substantial risk and is not suitable for every investor. Let's start with NVIDIA on the 15-minute chart. We're looking at the price action around July 13th through July 20th, 2026. The important structure begins with a major high around July 16th, followed by a sharp decline into the low on July 17th. On the chart, we have marked both the high and the low, and our objective is to measure this specific swing in terms of price, time, and angular movement. The total bar count is 27 bars. This 27-bar measurement becomes our initial time input. Now we move to my proprietary software, the Intraday Ascendant Mid-Heaven Calculator, and examine the ascendant value at the swing high. On July 15th, 2026, at 3:45 p.m., the ascendant value shown is 231.87 degrees. This becomes our first angular reference. Now we move forward to July 17th, 2026, and once again look at the intraday ascendant calculation. At 9:30 a.m., the ascendant value is approximately 159.31 degrees. The intraday ascendant mid-heaven calculator you're seeing here is part of the proprietary tools I provide to serious traders through my private teachings. These tools are designed to help you study market timing, test time cycles, and develop a more structured approach to intraday analysis. I also share free tools, market insights, and educational content through my free Telegram channel. If you want to follow along and explore these concepts yourself, you can join using the link provided below in the description. Now we calculate the difference between the two ascendant values. We take 231.87 degrees and subtract 159.31 degrees. The result is 72.56 degrees. So during our measured swing, the ascendant moved through an angular distance of 72.56 degrees. At this point, we have 2 important pieces of information. We know that the market swing lasted 27 bars, and we know that during that swing the ascendant moved 72.56 degrees. Now we can take that observed angular movement and convert it into a complete 360-degree cycle. This is where the calculation becomes interesting. We want to determine how many bars would correspond to a complete 360-degree rotation based on the angular movement we just measured. We calculate 27 multiplied by 360 divided by 72.56. 360 divided by 72.56 gives approximately 4.9618, and when we multiply that by 27, the result is approximately 133.996 bars. Rounded to the nearest whole bar, this gives us an initial calculated cycle value of approximately 134 bars. So our original 27-bar swing has now been transformed into a larger time cycle reference based on the ascendant's angular movement. Now, let's bring this calculation to the Gann Square of 9. We start with our calculated value of 134 bars and locate 134 on the square of 9. From that point, we move clockwise through the sequence of the square. The reason we follow the clockwise direction is that we are projecting the cycle forward in time from our original market swing. As we continue around the square of 9, we reach the highlighted vertical column. We take the first 3 values in this highlighted column, which are 139, 190, and 249. These become our 3 projected time cycle values, or 3 future bar counts, that we will now project onto the NVIDIA chart. We can now take each of these bar counts and project them forward from our original reference point. This gives us 3 specific time windows where we can watch NVIDIA for a potential intraday reaction. For the Gann Square of 9, our first projected time window comes at approximately 139 bars, corresponding to Friday, July 24th, at approximately 11:45 a.m. Notice what happens as price approaches this time window. NVIDIA pushes higher, reaches this projected area, and then begins to show clear signs of rejection. Now let's move forward and see what happened after that first projected time. The rejection becomes much more obvious. After reaching the projected window, NVIDIA starts to weaken and price moves sharply lower. Now we move to the second projection. The Gann Square of 9 gives us approximately 190 bars, corresponding to Tuesday, July 28th, at approximately 11:30 a.m. Again, we are not predicting a specific price target here. We are watching the time. As NVIDIA approaches this second projected window, notice how price begins to recover from the previous decline and then pushes into the projected area. And once again, we see a rejection develop around the calculated time. Let's continue moving forward. After the reaction around the second projected window, NVIDIA once again begins to weaken. Price initially holds around the area, but the selling pressure eventually takes over and the market moves lower. Now we arrive at our third and final projection. The Gann Square of 9 gives us approximately 249 bars, corresponding to Thursday, July 30th, at approximately 1:15 p.m. Once again, we simply wait for price to reach the calculated time window. And this time, instead of looking for a top, we are watching to see whether the market can produce a bottom or a change in direction. As we approach the projected time, NVIDIA is trading near its lows and begins to stabilize. Now let's see what happened next. Around the third projected time window, NVIDIA finds support, and the selling pressure begins to fade. Shortly after this calculated time, price starts to reverse higher and eventually produces a strong recovery. So what are we actually doing mathematically? At its core, this method is based on a proportional relationship between market time and angular movement. We begin with an observed market swing, measure how many bars it took, and then measure how many degrees the ascendant moved during that same interval. From those two measurements, we can scale the relationship to a complete 360-degree rotation and obtain a larger time cycle reference. Think of it as angular scaling. We know that a complete circle represents 360 degrees. Our market swing represents only a portion of that rotation. So rather than choosing a future time arbitrarily, we use the observed relationship between bars and degrees and scale it to a complete rotation. That gives us the larger cycle that we then take into the Gann Square of 9. Let's change one variable and see what happens. This time, we're going to use a half rotation of 180 degrees instead of the full 360-degree rotation on different asset. Here we're looking at Bitcoin on the 15-minute chart. We begin with a clearly defined swing from a significant low to a subsequent high. The low occurs on August 1st, 2026, at approximately 2:30 p.m., and the high occurs on August 2nd at approximately 1 a.m. Our first step is exactly the same as before. We measure how many 15-minute bars occur between these two reference points. The measured movement contains 42 bars, which represents a total elapsed time of approximately 10 hours and 30 minutes. So, our initial time input for this Bitcoin example is 42 bars. This becomes the starting point for our time cycle calculation. Now we bring in the intraday ascendant mid-heaven calculator. At the beginning of the swing, at the Bitcoin low, the ascendant value is approximately 230.26 degrees. We then move to the opposite end of the measured swing, where Bitcoin reaches its high. At that point, the ascendant value is approximately 62.85 degrees. These two values give us the angular movement that occurred during the 42-bar swing. Now we calculate the total ascendant movement between these 2 points. We take the absolute difference between 230.26 degrees and 62.85 degrees. This gives us an angular movement of approximately 167.41 degrees. So, during the 42-bar Bitcoin swing, the ascendant moved approximately 167.41 degrees. This is the key relationship we will now use to project forward in time. Now comes the important difference from our NVIDIA example. Previously, we asked how many bars would correspond to a full 360-degree rotation. Here, instead, we are asking how many bars would correspond to a 180-degree half rotation. So the calculation becomes 42 multiplied by 180 divided by 167.41. This gives us approximately 45.17 bars. Rounded to the nearest whole bar, our projected time value becomes 45 bars. Now we take this calculated value of 45 bars and bring it to the Gann square of 9. The important point here is that the square of 9 is not being used to calculate the original cycle. The 45 bar value has already been calculated from the relationship between price, time, and ascendant movement. We are now using the square of 9 to expand this calculated value into additional future time cycle values. Starting from 45, we move through the square of 9 and identify the next relevant values in the sequence. From the square of 9, the next highlighted values give us approximately 46 bars, 77 bars, and 116 bars. These become our 3 projected future time windows. So instead of focusing on a specific price target, we now have 3 points in time where we can observe Bitcoin for a potential reaction. Our 3 projections are 46 bars, 77 bars, and 116 bars. Now let's project each of these forward onto the Bitcoin chart and see what actually happened. Now we move to the first projected time window, which is 46 bars from our original reference point. On this chart, the 46 bar projection lands at approximately 12:30 p.m. on August 2nd. Notice what happens around this time. Bitcoin has been moving sideways after the initial decline, but as we reach this projected time window, price begins to react upward. From this point, the market starts developing a stronger bullish move. Next, we move forward to the 77 bar projection. This time window occurs at approximately 8:15 p.m. on August 2nd. By this point, Bitcoin has already responded positively to the earlier 46 bar window and has moved significantly higher. As we approach the 77 bar time projection, the upward movement fades and price pushes toward the previous lows. This gives us another important observation. The projected time window is once again associated with a meaningful change in market behavior. The market does reverse exactly at the projection. Now we arrive at the third and most important projection, which is 116 bars. This corresponds to approximately 1 day and 5 hours from the original reference point, placing the projection around 6 a.m. on August 3rd. Here, we can see a much more significant reaction. Bitcoin reaches the projected time window after moving higher, and price begins to reverse sharply to the downside. The red arrow marks this projected time area, while the following candles show the bearish reaction developing. After the 116 bar projection, the bearish reaction becomes much clearer. Bitcoin continues moving lower from the projected time window, and the decline develops into a sustained downward move. In this Bitcoin example, the 46 bar window was associated with an upward reaction. The 77 bar window occurred during another important phase of the rejection, and the 116 bar window aligned with a much stronger bearish reversal. This demonstrates how the half rotation method can be used to transform an observed ascendant movement into practical future time windows for market observation. Before we move further, let's look at another mathematical idea that is closely related to the way we are studying market cycles, which is symmetry. In mathematics and geometry, symmetry describes a relationship where different parts of a structure correspond to one another according to a particular rule. A simple example is a circle. If we rotate a circle through a specific angle, we can arrive at another position that has a defined geometric relationship with the starting position. The interesting question for markets is whether similar relationships can be observed in time, price, and angular movement. Markets are not perfectly symmetrical, but they often contain measurable relationships between different movements. A price swing can have a particular duration. Another swing later in the chart may have a related duration, even if the actual price movement is completely different. So instead of asking whether 2 market movements are identical, we can ask whether they maintain a mathematical relationship. This is where symmetry becomes useful. It gives us another way to compare one part of the market structure with another. The first type of symmetry we can examine is time symmetry. Suppose a market moves from one significant point to another in a measurable number of bars. We can then look forward and ask whether a related amount of time appears again from another important reference point. The key measurement here is not the price difference. It is the duration of the movement. In other words, we are asking whether the market's clock contains recurring relationships that can be measured in bars. Imagine a market takes 27 bars to travel from a significant high to a significant low. We can then examine future points at related time intervals, 27 bars, 54 bars, 81 bars, or other mathematically related intervals. Now we can take the same idea into geometry. A circle contains 360 degrees, which means every position around the circle has an angular relationship with every other position. A quarter rotation is 90 degrees. A half rotation is 180 degrees. 3/4 is 270 degrees. These divisions create natural symmetrical points around the circle. When we introduce the ascendant into our analysis, we are able to observe its movement through these angular relationships over time. This is where the idea becomes more interesting. Instead of studying time, symmetry, and angular symmetry separately, we can study them together. We can ask whether a particular amount of market time corresponds to a particular amount of angular movement. In our NVIDIA example, this was exactly what we measured. We had a defined number of market bars and a defined amount of ascendant movement during the same interval. That gives us a relationship between time and angle rather than looking at either measurement independently. There is another geometric concept worth considering here: rotational symmetry. A circle does not have a single direction or endpoint. Instead, it continuously rotates through its angular positions. This means that once we establish a reference position, we can examine what happens as we move through successive angular relationships. This is one reason the Gann Square of 9 is interesting in this context. Its numerical arrangement allows us to examine numbers through a rotational framework rather than treating them simply as a linear sequence. But there's an important distinction. When we talk about symmetry in markets, we are not saying that the future must perfectly reproduce the past. A symmetrical relationship could appear through time, angle, proportion, or phase, while the actual price movement may look completely different. So the purpose of symmetry is not to force the market into a predetermined pattern. It is to identify relationships that can be measured and then tested against what actually happens. So far, we have used the Gann Square of 9 to convert our calculated cycle into future time projections. But there is another Gann geometric arrangement that we can use to study the same relationship from a different perspective: the Gann Square of 4. At first glance, this table may look very different from the Square of 9. But the underlying idea is similar. Numbers are arranged geometrically rather than simply written in a straight sequence. The important difference is that the Square of 4 is built around a fourfold structure, giving us another way to organize numbers, angles, and cyclical relationships. The name comes from the way the structure is constructed around a number 4. Instead of thinking about the market as a simple linear sequence of numbers, we can think of the numbers as expanding through geometric rings. The first complete square is formed from 4 positions, and subsequent rings expand outward from the center. So the key idea here is not simply the number 4 itself. It is the 4-part geometric organization of the number sequence. Now, let's look at the mathematics behind the structure. One of the interesting relationships in the Square of 4 comes from the square numbers multiplied by 4. Take 1 squared. That gives us 1. Multiply it by 4, and we get 4. 2 squared gives us 4, and 4 times 4 gives us 16. 3 squared gives us 9, and 4 times 9 gives us 36. 4 squared gives us 16, and 4 times 16 gives us 64. So we get a sequence: 4, 16, 36, 64. Now, let's look at something even more interesting. Don't just look at the numbers themselves. Look at the difference between them. From 4 to 16, the difference is 12. From 16 to 36, the difference is 20. From 36 to 64, the difference is 28. So the differences are 12, 20, 28. What do we notice? Each difference is increasing by 8. And that pattern continues. So why does this happen? Mathematically, we are looking at 4 times 1 squared, 4 times 2 squared, 4 times 3 squared, and so on. The difference between consecutive squares is an odd number sequence. 1 squared to 2 squared increases by 3. 2 squared to 3 squared increases by 5. 3 squared to 4 squared increases by 7. So the increases are 3, 5, 7, 9. When we multiply those differences by 4, they become 12, 20, 28, 36. That's why the spacing between these key levels keeps increasing by 8. Let's start by simply observing Apple on the 30-minute chart. Price falls sharply into the February 17th low, then begins a strong recovery toward the $276 high on February 26th. Take a moment and notice this low-to-high structure. This is the price range we'll use for our time and geometry analysis. Now we measure the time between Friday, February 20th, 2026 at 9:30 in the morning and Thursday, February 26th at 9:30 in the morning. TradingView gives us 52 bars. Keep that number in mind, because 52 is now our key time value. Here's where we transform that time value. We take 52 bars and apply a 45-degree cosine transformation. In simple terms, we're converting the original time measurement into a geometric reference. So our calculation becomes 52 multiplied by the cosine of 45 degrees. Cosine of 45 degrees is approximately 0.7071. So 52 multiplied by 0.7071 gives us 36.77, which rounds to 37. Now pause and remember that number, 37, is our transformed reference value. Now we bring that 37 into the Gann Square of 4-grid. Find 37 and notice where it sits within the surrounding sequence. The important point is that we didn't choose 37 randomly. It came directly from our 52-bar time measurement and the 45-degree transformation. Finally, we project these time relationships forward. We can see the additional reference dates: Tuesday, March 3rd at 10 in the morning, Thursday, March 5th at 11:30 in the morning, and Tuesday, March 10th at 10:30 in the morning. Now the interesting question is, which of these dates will actually produce a meaningful reaction in Apple's price? That's what we watch next. Now we can see the first projected setup appearing on the chart. Price has reached the expected time area around Tuesday, March 3rd, and we're watching how the market reacts around this reference point. The short setup is marked with the red risk area above and the green projection below. At this stage, we're not assuming the outcome, we're simply observing whether price begins to respect the projected direction. This is where the time calculation becomes something we can actually test against market behavior. Moving forward, we can see the sellers beginning to gain more control. Buyers attempt to support price, but each recovery is met with additional selling pressure. Eventually, the sellers overwhelm the buyers, and Apple starts moving lower toward the projected downside area. Notice the transition here. Initially, buyers were in control, then momentum weakened, and finally sellers took over. This is exactly the type of price reaction we want to observe around a calculated timing window. Now we approach our next reference around Thursday, March 5th at 11:30 in the morning. After the previous decline, sellers have been dominant, but as price reaches the lower area, their momentum begins to weaken. Buyers start becoming active again and begin absorbing some of the selling pressure. Price stabilizes instead of continuing straight down, which tells us that the balance between buyers and sellers is changing. This creates the next area where we watch for a potential reversal or recovery. Now we approach our next reference around Thursday, March 5th at 11:30 in the morning. After the previous decline, sellers have been dominant, but as price reaches the lower area, their momentum begins to weaken. Buyers start becoming active again and begin absorbing some of the selling pressure. Price stabilizes instead of continuing straight down, which tells us that the balance between buyers and sellers is changing. This creates the next area where we watch for a potential reversal or recovery. Finally, we reach the next major timing reference around Tuesday, March 10th at 10:30 in the morning. Price has recovered from the previous decline, so buyers are once again becoming active and pushing Apple higher. But as price approaches the projected resistance area, we now watch carefully for sellers to appear. The important question is whether buyers can maintain control or whether sellers will absorb the buying pressure and create another reversal. This is where the mathematical timing framework meets the real battle between buyers and sellers. Now moving to the next chart, we're looking at Google on the 1-hour chart. Start by observing the overall structure. Price pushes higher into the November 25th high, but after that high, the selling pressure gradually takes control. We can see lower highs and lower lows developing as price moves down toward the December 17th low. At the beginning of this move, buyers are still active and able to push price higher. But once the high is established, sellers become more aggressive. Each subsequent decline shows that sellers are gaining control, while buyers are mainly stepping in temporarily to create short-term rebounds. So here, we have a clear high-to-low structure, and this measured swing will become the foundation for our time and geometry analysis. Now we measure the time between Tuesday, November 25th, 2025 at 9:30 in the morning and Wednesday, December 17th at 3:30 in the afternoon. TradingView gives us 108 bars, or 22 days and 6 hours. This is our key time measurement. Now we take that measured swing of 108 bars and apply our 45-degree cosine transformation. The idea is to convert the original time measurement into a geometric reference value. So our calculation becomes 108 multiplied by the cosine of 45 degrees. This gives us a transform value that we can then bring into the Gann numerical grid. Now, let's complete the calculation. The cosine of 45 degrees is approximately 0.7071. So we take 108 multiplied by 0.7071. That gives us approximately 76.37. When we round that to the nearest whole number, we get 76. So our original time measurement of 108 bars has now been transformed into a geometric reference value of 76. This is the number we're going to carry forward into the Gann numerical grid. Now we bring our transform value of 76 into the Gann numerical grid. Notice that 76 is highlighted within the sequence. This is important because the number did not come from the grid itself. It came from our measured 108-bar swing and the 45-degree cosine transformation. We can also see the surrounding values, including 78, which becomes important when we project the time relationships forward. So at this stage, we have three pieces working together: the original market swing, the time measurement, and the geometric transformation. The next step is to see how these values translate back onto the time axis of the chart. Now we project these time relationships forward from the December 17th low. The first projected interval is 78 bars, taking us to Friday, January 2nd, 2026 at 9:30 in the morning. The next projection is 117 bars, taking us to Friday, January 9th at 1:30 in the afternoon. And the third projection is 164 bars, taking us to Tuesday, January 20th at 11:30 in the morning. As you can see in the chart, the previous major high was formed on November 25th, followed by the major low on December 17th. From this low, the first measured time cycle completed after 78 bars, or approximately 19 days and 21 hours, aligning with January 6th. This time count aligned with January 14th, where price reached a significant high and produced the corresponding sell signal. This date coincided with bearish reversal and generated the next sell signal. Following the January 14th decline, price reversed again. The larger time count from the December 17th low reached 164 bars, or approximately 36 days and 23 hours, aligning with January 23rd. This date coincided with another bullish reversal and generated the next buy signal. One more thing I want to tell you as advice: make journaling a regular part of your trading practice. Don't just save the trades you got right. Keep the complete chart data, including both backtesting and forward testing. The more accurately you record what you see and what actually happens, the better you become at understanding your own trading process. As you can see from the charts, the real learning happens when you keep the evidence in front of you. Your journal gradually becomes a record of your observations, expectations, mistakes, and improvements. This is one of the best practices a trader can develop because, over time, your own collected data can show you patterns that no single trade ever could. For my private teaching students, this is something I strictly advise them to do as part of their study process. I want them to maintain their chart data carefully, document their calculations, and keep track of both their backtesting and forward testing results. I also personally go through their study material and review the questions and queries they come across. When something is unclear, we work through the reasoning together so they understand not only what to calculate, but why they are calculating it. Ultimately, traders must build a process that they can continue using on their own. I want my students to develop that process through their own charts, calculations, journal entries, backtesting, and forward testing results. All of this gradually becomes their own body of work and their own database of market observations. My role is to guide them through that process, personally go through their study material, answer their questions, and help them improve their reasoning. The goal is not for students to depend on someone else's conclusions, but to develop the ability to analyze, test, validate, and trust their own observations. Now we move to the next chart, this time looking at WTI crude oil on the 1-hour chart. Here, I've already marked the major swing high and swing low on the chart. Now we measure the time between the swing high on Thursday, July 23rd, 2026 at 2 in the afternoon, and the swing low on Tuesday, July 28th at 12 noon. TradingView shows us a total of 67 bars, or 4 days and 22 hours. So, for this analysis, 67 becomes our key time value. Now we transform that time value using the same 45-degree cosine relationship. We take our bar count of 67 and multiply it by the cosine of 45 degrees. So the calculation is t equals 67 multiplied by cosine of 45 degrees. This gives us our transform time value. Since the cosine of 45 degrees is approximately 0.7071, we calculate 67 multiplied by 0.7071, which gives us approximately 47.38. Rounding this to the nearest whole number gives us 47. So now, 47 is our transformed reference value. Now we bring that 47 into the Gann numerical grid. You can see 47 highlighted within the sequence. Now we project this time relationship forward from the marked swing low. The chart gives us several important future time references: 47 bars, 78 bars, and 117 bars. These project to Thursday, July 30th at 1 in the afternoon, August 2nd at 10 in the evening, and Tuesday, August 4th at 2 in the afternoon. Now the key question is, which of these projected time windows will produce a meaningful reaction in crude oil price? That's what we'll watch as we move forward. Now we move forward and observe how price actually reacted around these projected time intervals. The swing high and swing low are already marked, and from the original swing high, we have our 67 bar measurement. From there, we project the transform time relationships forward. The first important interval is 47 bars, followed by 78 bars, and then 117 bars. These are the time points we'll use to observe the market's reaction. Here we can see the first reaction around the 47-bar interval. Price approaches the projected time zone and begins to show a change in behavior. Instead of continuing cleanly in the previous direction, we get a reaction followed by a move higher. Now we move to the next projected interval, the 78-bar relationship. Price reaches this time zone and again gives us a visible reaction. The market initially pushes higher, but the move fails to sustain itself and price turns lower. Notice how the reaction develops around the projected timing window rather than occurring randomly in the middle of the structure. Next, we reach the 117-bar interval. This is where the reaction becomes much more significant. Price continues lower into the projected time zone, forms a low, and then begins to reverse sharply upward. The green arrow highlights that reaction from the low. So here we have another example of time acting as a potential turning point. Finally, we extend the chart further to see what happens after that reaction. From the projected low, price develops a sustained recovery and moves significantly higher into the following sessions. The important point is that our projected time intervals are not being used to predict the exact direction by themselves. Instead, they identify windows where we pay close attention to price behavior. When the market reaches those windows, we then look for an actual reaction, reversal, or change in momentum. Putting everything together, we now have the complete sequence. The original swing high, the swing low, the 67-bar reference, and the projected 47-bar, 78-bar, and 117-bar intervals. Each interval gives us a specific point in time to watch, and the chart shows meaningful reactions around these areas. This is the key idea. We use time to identify the window and price action to confirm the reaction. Once we have identified a potential reaction zone, the next step is trade management. Before entering a trade, we need to define three things clearly: where the trade is invalidated, where we expect price to react, and where we will take profit. The important point is that these decisions should be made before entering the position. This prevents us from changing the plan emotionally once the trade is active. Here the focus is on risk. A time-based setup can identify an important window, but that does not mean the reaction is guaranteed. This is why the stop loss is essential. We want our risk defined at the point where the original idea is no longer valid. If price moves through that level, we accept that the setup has failed and exit according to the plan. Now, once the trade is active, we need to give price enough room to develop. One of the biggest mistakes traders make is interfering too early. If the market initially moves against us but remains within our planned risk, we should avoid making decisions based on fear. The trade should be managed according to the structure we defined before entry, rather than according to every individual candle. As price begins to move in our favor, trade management changes. We can start thinking about protecting the position and reducing unnecessary risk. Depending on the strategy, this could mean moving the stop after a meaningful structural move, taking partial profits, or allowing the remaining position to continue toward the larger target. Finally, We need to remember that an exit is part of the trade from the very beginning. Whether price reaches our target, invalidates the setup, or gives us a reason to close early, the decision should come from the trading plan. Good trade management is not about predicting every move. It is about controlling risk, protecting capital, and allowing the probability behind the setup to play out. Now let's move into another important part of the process, which is conscious trading. Conscious trading means being aware of what we are doing, why we are doing it, and what we are feeling while we trade. Instead of reacting automatically to every movement in price, we pause and ask ourselves whether the market is actually presenting the setup we planned for. Markets can move quickly, and those movements can create fear, excitement, or the urge to act immediately. But our emotions should not become the decision-making system. If our analysis says we need to wait for a specific time window and a specific price reaction, then we wait. The discipline is in following the process even when the market is trying to make us act impulsively. Conscious trading also means knowing when not to trade. Not every projected time interval will produce a clean setup, and not every reaction needs to become a position. Sometimes the best decision is simply to observe. By waiting for our conditions to align, we avoid taking trades just because we feel that we need to participate in a market. One of the most important principles of conscious trading is accepting uncertainty. Our time calculations, geometry, and price analysis can help us identify areas of interest, but they cannot eliminate uncertainty. We are working with probabilities, not guarantees. Once we accept that, a losing trade becomes information rather than a personal failure. And finally, conscious trading means focusing on the process rather than obsessing over the outcome of a single trade. Do we follow our setup? Did we manage the risk correctly? Do we respect our entry and exit rules? If the answer is yes, then we executed the process correctly, regardless of whether that individual trade won or lost. The goal is not to control the market. The goal is to control our decisions. The market doesn't reward being right. It rewards being positioned correctly when you're right. A good analysis without risk management can still produce a bad trade. A failed breakout can be more informative than a successful breakout. When price breaks a level and immediately returns, the failure itself can reveal where trapped traders are positioned. Time and price should be studied together. A price level becomes more interesting when the market reaches it at a meaningful time.